I've talked about getting an RV loan before, but this subject is so important I thought I would revisit it. There's a link to the first video in the description below. Now, a lot of what I'm going to say is repetitive, but there is one thing that's changed: the interest rate. Back in 2019, you could get interest rates of around 5% or less, but now not so much. I found one website that started at 8.24% and went up from there. Before you say, well, it's only a few percentage points, so no big deal, just wait. Interest rates for loans are determined by a lot of factors, everything from inflation to energy prices to global tensions. And the interest rate you are offered on a loan can be affected by things like the type and age of the RV, your credit score, the loan term, and so on. I can't really speak to these factors as they are determined by situations well beyond my or even your control, but I can compare typical loans to see how each affects your wallet. Typical RV loan terms range from as low as 2 or 3 years on up to 7, 10, and for much higher loans, 20 years. The longer the term, the lower your payments each month, but the higher amount you will pay in the long run. Let's say you're able to get an RV for $103K. Taxes vary by state, but let's say you pay 6.5%, and let's say there are some additional dealer fees. So we can start with a nice round number of $110K for that RV. I just like round numbers. Let's also say you pay 20% down, or $22K. You want to pay at least that, since anything lower usually means you will have an additional charge from the lender for insurance. And that money is not part of the repayment of that loan. It's in addition to the loan. Not good. Always pay at least 20% down. This means after the down payment, you get a loan of $88K. Now with this figure, let's look at paying the loan back under different terms and different interest rates. Let's begin with 5% interest, which is lower than the average, but hey, you may get lucky. You never know. Now, how does that affect your wallet? Well, it depends on the term of the loan. At 20 years or 240 months, you're looking at a monthly payment of just under $600, but the total interest you pay is over $51K. Remember, that 5% interest rate is compounded monthly, which means it's really higher than you think. That interest will ultimately total 47% of your original RV cost of $110K. If you can reduce that term by half, or 10 years, you're looking at a monthly payment of just over $900, so $300 more than the 20-year loan. But the interest you pay is only $24K, less than half what the 20-year loan would have cost you at only 22% of the original RV cost. And if you can cut that term in half again, at 5 years, the interest you pay is under $12K. Again, less than half what the 10-year loan would have cost you at under 11% of the original RV cost. Sure, your monthly payment goes up to over $1,600, but you pay far less in the long run. So what does this mean in actual dollar savings? Well, going from a 20-year loan to a 10-year loan will save you over 27 grand. And 20 compared to 5, that's a savings of almost 40 grand. That's more than the price of a brand new Toyota RAV4. The lesson here? Longer terms mean less of a hit to the wallet each month, but a much higher repayment in the long run. Of course, if you can make a higher down payment, your loan will be less to begin with, so that may help. And if you can pay more than the minimum monthly payment, you can theoretically pay off the loan earlier and pay less total interest. So what happens if you can't get a 5% interest rate? Going back to the 20-year loan, if the interest is only 1/2 of a percentage point more, or 5.5%, then your total interest is over $57K, or $6,000 more than the 5% interest rate. And that's just 0.5% difference in interest rate. If you are so unfortunate to have to pay the much more common and much higher rate of 9%, you're looking at a whopping $102,000 repayment, or double the original $51K you would have paid with a 5% loan. Basically, you may be getting one RV, but you're paying for two. Just so you know, if you can swing a 10-year loan at 9%, you would pay just under $46K in interest, less than half the 20-year loan. That's a savings of over $56,000, and that's almost the current U.S. average yearly salary. So what does this all mean? Even very small percentage increases can affect your wallet in very bad ways. So be wary of any lender saying something like, "It's only 0.5% difference." That can actually mean quite a bit of money on your end. So let's say 5 years have gone by on your 20-year 5% loan of $88K, and you've paid your minimum of $600 a month. That means you've paid a total of $36K. Your total interest in 20 years would be just over $139K, so you still owe $103K. Now, think about that a minute. The original cost of the RV was $103K. Well, not including taxes or fees. After 5 years, you still owe the equivalent of that original cost of the RV. Do you really think you could sell that RV for its original cost after 5 years of wear and tear? Somehow, I doubt it. If you want a new RV, you have to sell your old one for less than what you still owe, pay off the difference, and start all over again. So let's say you sell your used RV for $72K, about 70% of the original $103K cost. Again, not including taxes or fees. You take that money to partially pay off the original loan, so still owe $31K. If the new RV you want costs $125K, let's face it, inflation has increased prices, then that means it's really going to cost you $156K since you still owe on that original loan. And of course, you need a new loan, so you'll start all over again with those payments, including taxes and putting down another 20% down payment. The lesson? Long loan terms probably mean replacing the RV is not an option unless you come into some extra funds to offset the additional cost of paying off the original loan. You're basically locked in to that RV for those 20 years, unless you just want to get rid of it while still having to pay off the loan even though you don't have the RV anymore. Does this mean you should never get an RV unless you can pay for it up front? No. Most people aren't going to have $100,000 just lying around, so paying cash is just an unreasonable expectation. Most of us need a loan. Because of finances or other situations, you may only have the option to get a 20-year loan, and that's okay, as long as you understand what you're getting into and what limits this may impose upon you. You have to weigh the cost-benefit ratio for that kind of deal. Will the experiences you gain with that RV be worth the long-term costs and whatever other issues you may need to face in order to get that RV? I can't answer that. Only you can. But to be forewarned is to be forearmed, as they say. It would seem reasonable to approach this with finances in mind. So if possible, get the lowest interest you can find. Don't get tricked into thinking just a 0.5% difference isn't a lot of money, because it is. Reduce the term as much as you can. See if you can swing a 10-year loan instead of a 20-year loan. It does mean a higher monthly payment, but you save money in the long run. Make a substantial down payment so you don't need to borrow as much, and make sure it's at least 20%. That way, your repayment will not be so much of a hit, and each month you can avoid additional fees. Check with your lender to make sure that's true. And remember, you can reduce the interest and shorten the loan by paying more than the minimum per month. Some loans don't allow that, so you get charged full interest even if you pay off early. Check with your lender and avoid that kind of deal. Paying more than the minimum each month and applying that to the principal will lower the final repayment cost, and that's a good thing. The interest is based on the principal, and if that is less, then the money you pay in interest will be less as well. And finally, I highly recommend before you do anything, determine your real wants and needs. I can't emphasize this too strongly. This should really be your first step anyway. I've got a video on it. You may want to take a look. With this kind of information, you have the power to decide what the best options are for your specific situation. You may find you can afford that RV at a lower term than you think, if you're willing to reduce costs by giving up some things to get a better price. And the only way to do that is by really studying what those wants and needs are in the first place. You don't want to sacrifice a need. That would be disastrous. But if you have to, you can limit your wants for a better deal. I hope this video helps you think about the complexities of a loan and what pitfalls you may encounter along the way. I don't mean to imply loans are a bad thing. I don't think they are. But knowledge is power. The power to take control of a loan to get the RV of your dreams. Be seeing you.